If you thought 2024 was a wild ride for property, buckle up. 2025 is already shaping up to be a fascinating year. Interest rate cuts, shifting buyer demand, and some surprising market hotspots. All of these are creating new opportunities for smart investors. In this video, I will walk you through exactly what's happened in the first half of 25, where the market is headed for the rest of the year and beyond. Most importantly, what moves you can make right now to get ahead. Let's start with where we have been. So, the first half of 2025 saw Australian home prices climb another 6.2% nationally according to PropTrack. And that is on top of the solid growth we had in late 2024. Some cities smashed expectations. Perth led the pack with annual growth above 15%. Brisbane followed closely. And even Sydney posted over 7% growth year on year. What's interesting is that growth hasn't been uniform. Melbourne's recovery has been slower, while regional areas like the Sunshine Coast and parts of South Australia have quietly outperformed most capital cities. Big driver, low housing supply. Listing remains 25% below pre-pandemic averages according to Domain. Plus steady population growth putting pressure on rental and purchase demand. So where are we heading? Well, the Domain 2025 forecast report suggests that we will see continued growth into the second half of this year, but at a slower pace. National prices are tipped to rise by another 2 or 4% by December, with Brisbane, Perth and Adelaide expected to remain the standouts. Looking into 2026, forecasters are cautiously optimistic. Most capital cities are projected to be steady, but not explosive gains, largely thanks to interest rate cuts filtering through and ongoing shortage of supply. Markets with strong population growth like Southeast Queensland and parts of Perth are tipped to outperform. Meanwhile, some inner city areas in Sydney and Melbourne might see more stable or moderate growth as supply catches up. And here's something worth noting. Rental markets remain incredibly tight. Vacancy rates in some capitals are still below 1%, meaning rents are continuing to keep rising, adding pressure on affordability but also boosting yields for investors. Now the big headlines of 2025. The Reserve Bank has started cutting rates. We have had multiple rate cuts so far, bringing the cash rate down to 3.6%. And major banks like ANZ and Westpac are predicting at least one more cut before the end of this year. What does that mean for property? Well, lower interest rates normally boost borrowing power, which can push prices higher. But the effect isn't instant. It usually takes 6 to 9 months for the full impact to hit the market. So the real rate cut boost might be something we feel more in 2026. If that happens, we would see renewed buyer competition, especially among first home buyers and upgraders who have been sitting on the sidelines. Now let's talk fundamentals, the real drivers behind the numbers. We have got strong population growth from migration, ongoing housing undersupply, and infrastructure spending across transport and urban renewal projects. Combine all that with the construction challenges, historically tight rental markets, and a strong labor market, and you have got conditions that still support long-term property growth, even with the short-term fluctuations. These factors are what I call the base fuel of the property engine. They keep demand alive even when conditions cool slightly. But it's not all smooth sailing. We need to keep an eye on inflation trends, construction cost, and global economic headwinds, particularly China's growth and commodity demand. Also, any significant shift in government policy, such as tax incentives, housing supply measures, or change to negative gearing, could move the market in unexpected ways. Remember what happens during COVID? Now, looking ahead, most economists expect steady price growth over the next 5 years, underpinned by demand-supply imbalance. While annual growth may average 3 to 5%, certain high-demand areas could easily outperform. And looking out to 2030, most analysts agree Australian property prices will be higher, in certain areas possibly by 15 to 25% above current levels. The real winners will be those who buy well-located assets now, hold through the cycles, and capitalize on rental growth. So what should you do with all this information? If you are an investor or even a home buyer, the second half of 2025 could be a great window to enter the market before further rate cuts and population growth drive demand even higher. And out of all the data factors, target areas with high rental demand and strong infrastructure growth to maximize long-term gains. And last but not least, if you are upgrading, lock in the finance before demand heats up again in 2026. But success isn't just about timing, it's all about strategy. Knowing where to buy, what type of property to target, and how to position yourself for long-term growth. So if you want a personalized property roadmap based on your budget, your goals, and risk profile, I would love to help. Book a call with me directly at primepace.com.au/contact us by clicking the link in the description or head to primepace.com.au to get started. Let's make your next property move the smartest one yet. And if you found this video useful, give it a like, subscribe for more property market insights, and share it with someone who is thinking about buying this year. I'm Kuldeep from Prime Pace Properties, helping Australians invest smarter.